All right. Good morning and welcome to the Home Buying Insiders podcast. My name is Jeff Newton.
I'm Josh Buffum, and thank God it's Friday. That
Hey,
was
man.
kind of some funky music you brought us in. I was kind of good.
We kind of
digging
changed
that
that
groove.
Yeah, we kind of changed that up a little bit. Maybe we'll have to add a little more to that and then go a little bit longer because kind of made me feel good on a Friday
Yeah,
morning.
I like cracking a beer.
Well, I don't know if it felt that good yet. Maybe a
I guess it is early, isn't it?
Yeah, Bloody Mary though. I mean, it's never too early for a Bloody Mary.
Well, I'm flying out of here on Sunday. I'm going to go play golf for a couple days in Atlanta, so I'm already kind of on vacation.
Yeah, you look on vacation mode, or at least Super Bowl Chiefs mode. I mean,
Well, this is the one we lost.
oh,
This is the Tampa Bay one,
that's
but it's okay. We were in the Super Bowl, and you weren't.
exactly. That's nice. Well, yeah, like you said, thank God it's Friday. Man, it's been a long week and it's a dreary Friday. And we've, of course, that Midwest weather, we've gone up and down and up and down, and it's been kind of a mess.
Yeah, whatever weather we have, just wait a couple days, you'll get something completely different.
Yeah, this morning it was 30 degrees and raining, and Sunday I think it's supposed to be 70.
Yeah, everybody be playing golf.
But I'm glad you're going to be in Atlanta. You're hunting warm weather, but the warm weather's coming.
Oh,
here.
Whatever.
Yeah.
You plan something a month in advance. This is just what you get.
Well, that's what they say. You make plans, God laughs, right? I mean,
Right.
well, there you go. There you go. Well, a lot of things happened this week. A lot of big things in the mortgage industry and a lot of changes in the mortgage industry. Of course, today, one thing we want to talk about is credit. That's really what the premise of the show is. But we've got a few things that we want to get into that happened changing wise during the week. So why don't you start us off with the VA changes that are coming up?
Well, okay. So in April 7th, the VA is going to change their funding fee, and they're actually going to lower it, which is nice. The first use is going to go down to 2.15, which is,
Well, it saves money. I mean,
yeah, absolutely.
It's a big change for the VA. It's a reduction. It's a reduction in cost to veterans. So it's definitely a change for them and good for our veterans that are out there that are going to do VA home loans this spring.
Yeah, the funding fee is a financed closing cost. So what that means is you're not coming out of pocket that money, but it is added to your total balance. So this is just less money being added to the total balance,
which is always a good thing when you're talking financing of any kind, whether it be mortgages, cars, home, whatever it is. It's always good to have less.
A veteran might ask, well, why is there a funding fee? Well, the reason there's a funding fee is because they're guaranteeing 25% of your loan. And believe it or not, there are some defaults, and that funding fee covers those defaults.
Yeah, the good news is there's not a lot of defaults, but
most veterans pay for their home. The vast majority, but there are incidences where people don't pay.
Well, things happen, and that's really where we're going to get into credit is, things happen. Life is, for anyone to say that life's just perfect and easy and simple, they're not living. I mean, because life gets messy and things get difficult, and again, it's kind of like on the golf course. I got it all figured out.
Oh, you can't say that.
No, you can't. Well, you can't say that at any time. I mean, you think you've got it all figured out, but again, things change, circumstances arise, and it's just, sometimes you find yourself in a bad spot. As we get into credit today, we'll talk about how you can get yourself out of those bad spots because we've all found ourselves in them.
Just talking about credit, one thing you don't learn in school is about your credit.
No,
I didn't learn it. Did you learn anything in school about your credit? I didn't.
No, I think we learned how to spell it in like third grade or second grade or whatever it was.
They didn't talk about your credit rating. They didn't talk about your FICO scores. They didn't talk about, what your strategies were to make sure you maintain good credit. Those things were never discussed in school. They didn't talk about taxes. They didn't talk about anything like that. Being self-employed, those things were never discussed.
No.
So, personally, I've had bad credit before in my life. I had bad credit when I was young because I just didn't pay bills. That was the number one reason I didn't have credit, because I just would get stuff and then not pay for it.
Well,
and that was the number one reason I had bad credit. But then once I figured out, hey, there's credit and you got to get that stuff right in order to live life, then I got myself into good credit. But then I got in the mortgage business, self-employed, and paying taxes and this, that, and the other. And the next thing you know, it's a cyclical business. We're in a downturn right now, right?
Yeah, absolutely.
This is about my fifth downturn that I've been in business. 26 years is the fifth downturn.
Yeah.
Well, the first one was a little difficult for me because I was making a lot of money and I had an infrastructure that was based on that. And then the downturn happened, and guess what? I could pay, what I needed to pay, child support and the things that I had to pay, and the other stuff I couldn't pay. So I ended up with bad credit again.
And what do they say? Robbing Peter to pay Paul? And
It was so stressful and embarrassing because here I am in banking, coaching people on doing mortgages and this, that, and the other. And here I have a financial embarrassment. So it was really hard on me. It was hard. It was hard to reconcile that and to be open about it. You know, at this point in my life now, I had good credit for a long time, and I don't see myself having a bad credit situation again. Knock on wood.
Yeah.
But you know, back then, you know, it was hard to reconcile. It was embarrassing. But now having that perspective and that wisdom, I can definitely impart that to others.
Yeah, and the one way you keep yourself out of those situations is you learn. And I've said it, you've said it, we've said it for years. You know, you and I've been, you know, held partners and brothers basically for 15 years. And we've said it a million times. You learn lessons through pain. It's either physical or monetary. One of those two ways. And
you've had pain.
Oh, God bless, man. I don't even want to get in. My pain would be, you want to feel good about your life? Holler at me. I'll tell you some of the things I've gone through in mine.
Hey, it just made you better.
Well, and a lot of it's self-inflicted.
Oh, for sure.
But most people's pain is self-inflicted. I mean, let's be honest. I mean,
decisions.
Yeah. Well, everything.
You may not have seen it coming, but if you'd have taken a different turn, you might have avoided it.
Well, I mean, you know, when you take back in the day, and like as we said when we were young, you know, you look at, well, do I need a $800 car payment? Yeah, of course. Well, no, you don't. When you're 22, do you need the Escalade or whatever the hell it is no, you don't. I mean, you need transportation. And as you get older, you figure that out. You're like, you know, we're seeing right now 16% of people's car payments are over $1,000 a month. I saw that stat the other day. I damn near fell out of my chair. I'm like, what? How much? My first house payment was under $1,500. $1,000 to drive a vehicle to and from. I mean, where are you going for $1,000 a month? You can't afford anything else but to go take your ass to work.
You got to be cool though, Jeff.
You know, maybe that cool factor went out the window and when you have kids. I don't know, but $1,000 a month on a car payment.
I think the cool went with my hair. That's about the time the cool left me.
Yeah, well, that's about the time I had kids too. So there you go. That's when I started shaving my head. Yeah. So I think that's probably when the cool factor went. But yeah, we are going to get into credit and really not just the broad strokes of it. I want to get a little bit deeper into it because that's the number one question we get is understanding credit.
What's the number one factor in whether you qualify or not?
Yeah. Well, yeah.
Well, your job. Obviously, if you can pay for it.
Credit,
but then after that, it's your credit.
Yeah.
Are you willing to pay for it?
Yeah. If you're unemployed with a 780 credit score, guess what? You're not getting a house.
Yeah.
But if you are employed and you're making $500,000 a year and you got a 510, you're going to have troubles too.
Yeah.
So, but
we'll have a solution for you.
Exactly. And there's always a solution. You know, we worked with some great people over the years about on solutions and how you can take yourself from, well, not only that, we've done it ourselves.
Yeah.
We've gone from the bad to the good, and it takes diligence. It takes work. It takes time. It takes effort. But
I mean, it was easier for us because we knew what to do. You know, I'd like to think that, you know, when I got myself into financial difficulty, I knew exactly how to get myself out of it, or at least I learned pretty quick.
Well, but you also know how to get stronger. You also know how to lose weight. You also know how to live longer. You also know how to do all this. We can all know it. I mean, you know the information. Doing it is a completely different situation because it takes time. It takes effort. It takes diligence. I mean, you can't go through, maybe if you're trying to pay off credit cards or if you're trying to reduce your debt.
Consistency over time.
Exactly.
That's the best way.
You know, and maybe the $8 Starbucks on the way to work every morning isn't the answer. Maybe it's you buy a $12 Mr. Coffee at Walmart, you stick it on your counter at your house, and you make sure you throw a little coffee in your cup on the way to work. You know, I mean, that little bit of, and people don't think about it, but that saves, if you take that over, you do that 5 days a week and you do it every month, then that saves up money, and you can pay off a credit card, or you can pay down your car loan quicker, or you can, instead of financing your vehicle for 72 months or now 84, I see a lot of people doing 84 months. You can do maybe a 48 month, 60 month. What's crazy is back in the 20 years ago, 60 months was like, well, we're really stretching it out there. And now it's like we have 60, 72, and 84 month options. It's like,
car payments are ridiculous. I see credit bureaus all the time with car payments $800,000. That's house payments.
At least.
Those are, but people are paying that amount to drive a vehicle. So you know, if you're going to pay that much for a vehicle, when you get it paid off, you probably should keep driving it for a while because that's a good way to build your credit and build wealth is to not have an $800 car payment
or any car payment at all if you can avoid it. Now, I'm not of the, you know, there's a lot of good guys out there. I mean, you can get a lot of advice. Oh my God. If you want advice, just get on the internet. You'll find some guy with talking. I mean, here we are.
Right.
But I mean, there's tons of advice out there. Well, you never finance anything. Look, man, I'm not of that. And I'm not going to call him out because there's a lot of people out there that love and follow. And yeah, it's a great dream, a great thought. I'll never have to finance anything. I'll always pay cash for everything. Yeah, gosh dang it. I would love to be able
Most
to do
people
that.
aren't paying cash for a $40,000 vehicle or $50,000 vehicle or $60,000 vehicle because that's pretty normal pricing right now.
Yeah. Well, and that's if you're not going electric. I mean, you got all these people going electric with their electric trucks that are $80,000 and $90,000, which I mean, that's a whole different topic about the electric. Yeah, you want to know my opinion on that, just holler. But you know, it 50, 60, $70,000 for a vehicle, and then you take in if you go to a truck, a 3/4 ton or something like that, I mean, you're paying $85,000, $90,000. That's a lot of money. Now, granted, if you're a 3/4 ton, you might be using it, like it may be working for you, which is great.
Makes a lot of sense.
Yeah, then it makes sense. Well, because there's tax breaks and there's tax write-offs and things like that. Now, I don't know how we really got deep into the car stuff. I mean, you and I,
we come from the car business initially, so it's always interesting to us.
Well, we understand. Yeah, well, we think we understand it. I don't know if I understand it anymore. I don't. I won't understand $50,000, $60,000 being the average or normal price of a vehicle. I'll never. I'm sorry. I just won't understand. Maybe that makes me old. I guess I don't.
Used car prices are ridiculous now.
Well, every car price is ridiculous. I mean, I've got a kid getting ready to turn 15, and so, you know, of course, we're going down that road of what kind of car are you looking at, and well, he thinks he's getting a Charger or he's going to buy a Mustang. I'm like, dude, you've lost your damn mind. I don't know what you're thinking about. But you know, I look at some of these. I'm looking for like a 1995 Ford Ranger and something like that, 30 years old. I mean, and then you're still going to pay $5,000 and $6,000.
Oh
for
yeah, it never goes down below that. It doesn't matter how many miles are on it. A little truck.
Isn't that crazy?
Yeah.
I don't know. I mean, the prices of everything have gone up. Of course, this is not what.
Okay, credit.
Yeah, well, we'll get into credit. I don't know, man. You know us. We can sit and BS about whatever for a long time. It has been a good week. It's kind of been a long week. Maybe it's because we're getting into March, and I feel like spring is about to sprung. Spring is about. Whatever, however you say that. But I think spring is almost here, I guess.
We had a pretty mild February. I bet you it's got one more.
Oh, no. We probably got
one more winter beaten.
Yeah, probably about 5 more inches somewhere.
Oh, something.
Yeah, I'm not looking forward to that. But you know what is cool is baseball's getting ready to start. You and I are both huge baseball fans. I've coached baseball for a number of years. A lot of my guys that I was a part of coaching over the last 4, 5, 6 years, they're trying out for the high school team this year.
What's that like not coaching now?
It's not easy. I miss the hell out of it. But, you know, it's not the X's and the O's of it and the baseball of it. I miss the baseball of it, but it's the guys. It's amazing, you know, as you get older, and I tell my son this all the time, as you get older, you have a family, you have a wife, you have a job, you have all these responsibilities, and you don't just get an opportunity to really, until your kids are gone and grown and everything, you don't really get an opportunity to hang with the guys, you know, and with that baseball team, I was hanging with the guys. And yeah, they were, you know, we had 9-year-olds, 10-year-olds, and then we on up, but dude, those are my boys, and I love them all. And I've gotten a lot of phone calls and texts from guys that made their teams and stuff like that. And it was been really awesome. Now we had, you know, there's going to be some that aren't going to make it. And you know, if I know anything about the boys that I was a part of coaching, that it's probably just going to piss them off, and they're going to work a little harder. So I like that. I like a little chip on the shoulder. You know, look at the Kansas City Chiefs this year. They walked around with a chip on their shoulder all damn year.
It's going to be hard to manufacture that next year.
The chip or the team?
Yeah, the chip.
Yeah. Now someone needs to come out and say how bad they are.
Oh God,
something, because that chip's
again.
That chip's going to be tough to manufacture. But yeah, so baseball's starting up, which is awesome. So spring is getting here, but that also means one big thing, that people are going to start buying houses. The time of the year, right?
It is the time of the year.
So that's where that's why we wanted to start off with credit, because
it's so important.
It's everything.
It lets you access the best terms.
Well, and that's not only in mortgage. We're talking about the entire spectrum of it. I mean, in in insurance, car. I mean,
The best terms.
the best terms.
Yeah.
You're absolutely right. That's a great way to put it. Very good. That's a great way to put it. All right. Well, when we come back, we're going to take a 15-second break here. When we come back, I want to go in. We're going to dive into a little bit more of what credit, what breaks down your credit, how it works, what kind of makes up your score. And we've got a couple personal, well, not only personal, but stories that we've worked with customer wise, because we've worked with thousands upon thousands of customers, and not everyone's got perfect credit. So, well, that's a given. So we'll be right back. We're going to take a quick break, and then we'll come right back.
Veteran looking to purchase a home? Look no further than National VA Loans. At National VA Loans, we specialize in helping veterans obtain the home of their dreams.
All right, that was a very quick break because that was the wrong commercial. Yeah, that was an AI generated one.
Good job.
Well, hey, you know what? I'm produced. I gotta try to. I'm trying to do. You guys can't see. I got tons of crap.
I can't say
me.
anything. I just sit here and talk.
Yeah, he just gets to sit there and talk. So, but yeah, AI. That's another cool thing. AI. My God, it's making life pretty easy on a lot of people. What I hear is students are able to write term papers pretty quick.
That's scary. Chat GPT.
It is pretty scary.
The beginning.
We've done a few things with it, and I'm like, you can tell it's not you, or it's not human. So you go back in and rewrite it, but it does give you a nice little base, which is pretty fun. So, all right, so let's get into credit. Let's talk a little bit about what kind of makes up your credit. They look at a number of different factors, of course. Payment history. That's pretty self-explanatory what payment history is.
Well, it's number one. Obviously, you got to make your payments on time. That is the number one factor in your credit score. You're making your on-time payments.
And not only that's the number one factor, but it makes up about 30% of what your total score is, about 30%. So we're going to run down through all these, and then I want to kind of go back and because it's different for everybody. It's just like a new kid driving, right? A 16-year-old. Guess what? He can't do 5 miles over the speed limit. Cop's going to see a young kid 5 miles over. He's going to pull him over and give him a ticket. You and I, we might get away with 5 miles over. Well, same thing on credit. You got a younger person that's just starting out. They're 20, 21, 22. They only have 2 or 3 trade lines. They're fresh. You have a late on that.
Yeah.
I mean,
yeah, because you've got no track record.
Yeah, you don't have any history.
And your only track record is a screw up.
Yeah, is now in the last 12 months the only track record.
Which was my initial credit.
Absolutely. And that's kind of what I want to get into. I wish I would have known that back then, that it was so vital. I mean, every little payment, because I can remember the first time I missed the payment on something, I was like 19, and it was a $25 payment.
Yeah.
And in my head, it was
card is mine.
Yeah. Mine was what was it? Maurice's card.
Oh, Maurice.
Yeah.
Maurice's. What's that?
Dude, it was a crappy little, well, I don't know. It was an all right, I guess, department store. I'm from small town Missouri, you know that. So it was like
Maurice's in Trenton.
Yeah, it was Maurice's. I know but it wasn't in Trenton. It was in Chillicothe. Anyway, it was a 25 day.
The big city.
Yeah, the big city of Chillicothe. It wasn't the fact that it was a Maurice's. It was the fact that it was a $25 payment. I didn't give it any weight. To me, I'm like, oh, whatever, I'll get to it. Well, next thing you know, you go from a 640, because when you just start out with credit, it's not like your score is 800. So it's not like they start you at 800 and they work you backwards. They start you at nothing and they work you up. So you're sitting there with a 640. Well, you miss one $25 payment, one lousy $25 payment. Your score goes from 640 to 520. Well, no one told me that. Now, should have I known? I guess.
The good news is you don't have a lot of track records. So now if you start doing some good things, you'll go up quicker too.
Correct. You will. You'll move up faster. So that payment history is vital, and it's so important to everything you're doing. So no matter what it is, whether it's a $25 Maurice's card payment, a $25 Dillard's payment, or a $700 car payment, you cannot be late. Just set up auto pay. I mean, I know that sounds crazy, but if it's payments that you have to make anyway, set up auto pay. Now, not everyone's built that way, and not everyone can do that, but it is that important. I mean, especially we talk to a lot of first-time home buyers, and they're younger. I'll give it a little example here. 2 days ago, we've got a first-time home buyer that called in from, I believe it was South Carolina. Great kid, young kid. He was he graduated high school, or he was born the year I graduated high school, which will make a guy.
That depressing,
dude. It's so depressing. When I took his application, I'm like, he goes, yeah, something 97. I'm like, 90 what? 97. I'm like, dude. I graduated that year. That sucks. So, but anyway, but it does make you feel, but it does give you an opportunity to maybe instill a little bit of wisdom, hopefully, and a little, at least not wisdom, maybe, but experience. But I pulled this credit and he goes, yeah, I think I've got pretty good credit. So I pulled it up and we only had one score. It was a 614. But it was because there was one positive trade line, and then he had 4 other accounts that had gone into, they were super small. I mean, say like a Spectrum bill or a cell phone bill or something like that, super, super small, but it went into collections. And you look at it and I'm like, well, we're gonna have to figure something out here, because a total of $122, which is literally all it was, $122 in total collections between 4 of them, has dropped your score down. And it's not only that, but your negative credit outweighs your positive. I mean, take the score out of it. The negative outweighs the positive. Well, I mean, that's not a recipe for getting a mortgage or a car loan or the best terms on either of those things. So payment history is important, but also credit profile. So let's we'll go kind of the next one, and that's obviously amount of debt.
Yeah, your credit usage versus your amount that you're qualified for. So, if let's just give an example. You got a $2,000 credit limit on a credit card. If you're running 19, 2,000, 1,800, 2,000 every month on that credit card, that's going to negatively impact your credit. Even if you're making the bills on time, it still is going to show that, hey, you've reached your credit limit and that you're teetering on the border of not having any available. What creditors want to see is they want to see that you have the available credit, but you're just using a little bit of it and you're managing it very well. For instance, you might have a $10,000 credit limit, but you may only stay around $1,000, $2,000 in actual usage, and you're paying it regularly. Well, that's going to increase your credit quickly.
Oh, very quickly. I mean, it almost immediately. In fact, I mean, we see a lot of people we see a lot of people out there that have had, credit. Let's say they've got $50,000 worth of available credit through credit cards, but they owe $49,995.
Yeah. Well, that looks like bankruptcy to a lot of
exactly,
people,
and that's
to a lot of creditors.
And don't get me wrong, some people live. I mean, they live their day to day on their credit cards, and then they at the end of every month pay them off. So whenever you run credit, or whenever someone's looking at your credit, it may just not be in that cycle. It may be in a cycle where, okay, we just made and paid all this off, but it's still recording.
Well, then you need to increase your limit.
Exactly. And that's what I was going to say, is that's when you go in, you're making payments on time. You've had these cards for, 12 months or longer. You've never missed a beat. Everything's good. That's when you go to them and say, okay, look, it's time to increase my limit. I'm at $2,000. Take me to 5. That doesn't mean you need to still live like you're at 2,000.
Yeah. You don't need to be at 5.
but for your credit score and for your overall credit outlook, you want to be at 5. So, that's one thing. And we're going to come back in at the end and do some tips and things like that, of some things you can do with credit. But that's one of the definite tips to help you get, even as it doesn't matter how old you are on that one. I mean, sometimes being younger, you can do some other different things, but even if you're, our age and you need to increase your credit scores, that's one way to do it.
When I went through my hardship, in order to build my credit back after the bankruptcy, I actually got a credit card. And the first credit card I got only had a $500 limit. But I knew what to do. My usage was around 100, 150, and I paid it off every month.
Yeah.
So what I used it for was gas and, occasional lunch. And that's really what I used it for. And I paid it off every month. And within 3-4 months, my score was significantly higher. And then just one card. Then you add another card and you do the same thing with it. And pretty soon they're raising your limits. Now you're probably going to want to get rid of that card and get a better card, because usually those introductory cards have big fees and annual costs, and their interest rates ridiculous. But once you have established yourself over a year or so with those cards, you can get better cards and higher limits and
lower interest.
It's just, you got to stay within yourself and you got to manage it.
Yep.
And when you do that, you'd be surprised how quickly you can you can gain a great credit score.
You really can, and by doing just the right things, and sometimes they're very small. I mean, you just got to do the right things. All right. So next is that makes up about 15% of your score is length of credit history. Now, look, if you're 19 years old, yeah, guess what? You probably don't have a very long length of credit history. Now, I do have a good tip on this one as well. If you've got young kids out there, I know a lot of my friends, we all have kids about the same age. Yours are grown. You obviously did a good job. They're all homeowners. I mean, for God's sake,
They all have good credit.
all good credit and all homeowners.
They
So
learn from me.
yeah, they learn.
Really.
Well, they either learn from your mistakes or
They learn from my mistakes. I told them, I said, hey, you don't want this because this is bad.
this is how, yeah,
Because this is what happened to me.
yeah. But so for you out there that have kids that are in that 14, 15, 16, usually about 15 is about the age range where you can do this, but add them onto one of your credit cards. I mean, if you're an adult out there and you've got a great credit card that you've paid forever and you keep a low balance on and you don't use very often, add them on one of your credit cards. It builds their credit profile.
I mean, if you co-sign with them on a car,
yeah.
I mean, as long as they got a job and they're going to pay for it, I mean, it's a great way to get them started. You sign with them on a house. I mean, if you know what, I did it. I mean, if your child has the wherewithal to pay for it and it's going to be a positive impact on their credit and not a negative to you or them, then by all means co-sign with them. Let them get started. That's a great leg up.
Oh, that's a
Build equity.
whole show right there on when your kid goes to college instead of living in some apartment that, I mean, look at what rents are.
It's a great gift to give your kid is co-signing with them.
Absolutely. And it helps.
It builds
them.
trust, and obviously, they have to be trustworthy. But if you've raised your kids right, they understand how important it is to do the right thing. So I haven't had any issues with that. I mean, I'm sure people have, and I know they have, but anyway.
But length of credit, I mean, that was kind of for the fresh, young, early, 18, 19, 20-year-old. But as the older you get and the longer you have credit, you think, I mean, you were just talking about the $500 credit card that's got an annual fee. Well, you might not want to cancel that for a little while. You might want to keep that card open for a while so you can show that you have a longer length of credit. So you can show a longer credit history, even if you don't use it. I mean, I have one card right now that I haven't used in 2 years probably, and it has a $49 a year annual fee. Well, I bite the bullet. I pay that stupid annual fee because I've had that card for 5 years, and it's like, okay, I don't want to.
That's pretty cheap annual fee.
It's not terrible. I mean, I could probably call and complain, and I mean, maybe get them to reduce it or give me a disc. I don't know, who knows, but I want to keep it because it
is there some benefits to the card?
It looks good in my wall.
I mean, do you get miles or anything out of it?
No, I don't ever use it.
Well, then maybe 49. I mean, but if you're getting something out of the card.
Yeah, I've got 2 other cards that I use on a regular, one for household, one for, and this is a tip we're going to talk about later, but one for the work stuff. But this one's just one that I have because it has a long history of perfect pay, perfect history, never over the limit. That's another thing, talking about amount of debt. If you ever do go over the limit on your credit card, it does look bad. All right. But the way you can fix it is call and get your limit increased. I mean, if you have a $5,000 card,
you got a history of good pay.
Yeah, if you got a history of good pay, but you have a $5,000 card and you went over to $5,200 one time, call and get them to increase you to $5,500. I mean, you're not asking for a lot. You just want to always be below that maximum credit. So, but length of history. So if you do have older accounts that the older you get and they're open, keep them open. Unless, once you get to that point where you've got so many accounts, then you can probably knock some of those out and close them out if you want. The next is amount of new credit. This is about 10% of your score. And we see this all the time where, inquiries, right? You can see, when we had, and people don't think this, but we have underwriters that ask like, hey, it looks like that they've, they applied for a car loan, and then it looks like they applied for 4 credit cards, and now they've applied.
That's a big red flag.
Yeah, they start looking at that like, okay, what's going on?
But if you're shopping for a mortgage and you shop 3 different mortgage companies and they pull your credit within 30 days, you're only getting hit for one.
Yeah, exactly. Well, only a negative impact on your score for one. Yeah.
Right.
And the inquiry still
the underwriter's still going to want to know what the inquiry was about, but it's very, very okay to shop.
Absolutely.
But it's when you start looking for different things, cars, credit cards, you know,
Well-
other things besides your boat, you know,
Well,
in addition to the mortgage.
it's
That's when
when-
it's a red flag.
It's when they see a customer that comes in and we're doing a mortgage, and then, you know, obviously we have to do a soft credit pull prior to closing and to prove that, you know, no additional credit's been taken out. And then they see, well, he went to Nebraska Furniture Mart and he went here and they got a car loan and they got this. They're like, well, wait a minute. The most important part of this thing is the house. All right. How much did you just take out of Nebraska Furniture Mart? Well, 12 grand. Furniture ain't cheap, right? So there you go. It's you know, you gotta be mindful of that, especially no matter what you're doing.
And I want to throw this in right now, and I know it's a little off subject, but if we're in a mortgage transaction with you, please, please, please do not get new credit.
Yeah,
during the
just-
mortgage transaction, or at least if you're going to discuss it with your loan officer and go through your debt to income ratio and everything, so they can make sure it's something that can actually be done. I can't tell you the amount of times that I've been surprised by somebody who went to Nebraska Furniture Mart, not thinking because they did 0% financing and they didn't think that they incurred a bill, that all of a sudden they got themselves out of whack as far as debt to income ratio.
Yeah.
And they didn't understand. They didn't understand that 0 down still has a payment attached to it, even though it's 0% for a year, and that you don't have to make a payment for a year. Well, you still have a debt that's assessed to you.
Yeah. And there is nothing worse than
Do that after you close.
Yeah, do it after you close, because there's nothing worse than not being able to buy your house
Oh my
because you took out a
gosh.
furniture loan.
Oh my gosh.
And I've seen it, and it's awful. I mean, it's awful. All right, last on this is 10% of your score is a credit mix. So, you know, you have credit cards, you have installment loans. Installment loans could be anywhere from car loans, you know, personal loans, you know, like the furniture loans or things like
It
that.
just says you have an eclectic variety of credit and you've paid well on all of it.
Yeah, and you paid well on all of it. If you've got, you know, and it's crazy because credit cards are a little bit different. You might have a Walmart credit card, and it doesn't have near the weight on it, the value of it, as a Discover or a bank, whatever the case, Visa, Mastercard, whatever, a mainstream credit card. You know, so if you've got 15 store credit cards and only one main credit card, that doesn't have, those don't carry as much weight as this one. So
Unless they're all maxed.
yeah, then it carries a whole hell of a lot of weight. So, but that's really the kind of what makes up the credit score and makes up your credit profile. So we're going to take a quick break. Hopefully I can find the right little break here. And then we're going to come back. And I do want to talk about some tips and things like that on ways to improve credit and things you can do for not only yourself, but for your kids. Or if you're out there and you're a first-time home buyer and you're wanting to improve your score, some stuff you can do there. So take a quick break. We'll be right back.
Veteran, serviceman, reservist, National Guard member, or a surviving spouse, you may be eligible to qualify for a 100% no money down VA home loan. The VA home loan program is backed by the federal government and is one of the premier mortgage loans on the market today. Call us now for a free VA mortgage consultation and let us help you make your dream of home ownership become a reality.
All right, we're back. Again, Jeff Newton, Josh Buffum. Sorry, you were getting ready to say something.
I was going to say Josh Buffum, but you said it.
Oh, well, I got you there. We're good. All right. Well, so we've been kind of reviewing credit. So a little bit of quick review. 30% or 35% of your score is payment history. 30% is the amount of debt you owe. 15% length of credit history. 10% amount of new credit, and 10% kind of a credit mix. You know, what's out there. We haven't really got into the multiple different styles of credit reporting. But I do want to touch on that real quick because this is a question we get often.
Right.
You know, what's the difference between why do I pull a score of X and Credit Karma says I have this?
Well, because Credit Karma is evaluating you based on credit cards, because that's who's paying them. So credit card companies are evaluating you to see if you are qualified for a credit card.
Well,
not for a mortgage.
And they use two different scoring models. The scoring model, the primary scoring model that we use is the FICO scoring model. It's a little bit different weight. It has a little bit different history of it. The credit scoring model that they use is the Vantage scoring model, which it came out, I think the FICO scoring model is like 1989 or something is when it kind of came into the mainstream. And then the Vantage scoring, and that was really primarily the one that was used forever. Still used, obviously. We still use it. But then the Vantage scoring model, I believe 05, 06, somewhere right in there. it came out, and we never used it on the mortgage side. We never used it. I don't even think they use it in the car industry at all. But now we can use the scoring model, the Vantage scoring model. Conventional loans, conforming loans, we can use that Vantage scoring model. So it does allow for it. Sometimes that scoring is a little bit higher than what the FICO scoring model is.
Right.
So
I mean, I can't tell you the number of times where somebody's told me my Credit Karma score is 640, but when I pull them, they're around 600, or maybe even lower.
Or even lower, yeah.
And then they don't understand why. And I have to explain to them that, hey, this is based on, it's a more comprehensive
Outlook
look
at
your
your
total
credit
profile.
Yeah. And more of lending on a larger scale.
And it's a tri-merge. So it's got all three credit reporting bureaus in it.
Yeah, Equifax, Experian, and TransUnion. Those are your three primary bureaus that you're going to pull. Speaking of that, before we get into tips, gosh dang, there's so much on credit that we can go over. It's endless. A lot of people ask, where can I get a credit report? How can I obtain a credit report? How the hell do I know what's on my credit report? We suggest everybody go to annualcreditreport.com. Don't get me wrong, Credit Karma is fine. There are services like that. I'm not just picking out Credit Karma. I'm just saying there's multiple services like that, and they're all fine, and there's no problem with them. But if they don't give you the full look, and I just actually did this morning just to make sure that everything was still normal. But if you go to annualcreditreport.com, it won't give you your FICO scores. You can add that on, but for free, you can go in and you can see your report. You can see what's reporting, how it's reporting. You can dispute. I went in, I found it. This morning, I found something that it was reporting some address in Texas. I've never lived in Texas. So I just disputed it right there, and they'll remove it off there. Now, is that a big deal? No, not at all. But it is nice that you can actually dispute. And if you see lates that are on there that weren't late, you can dispute those as well. They're probably going to come back to you with something in writing and things like that. But you can get an idea of what's on your credit report from annualcreditreport.com. I suggest everyone do that annually. I mean, just do it because you need to know. I mean, I found at one time, this has been back, I don't know, this is back in like 2008, 2009, somewhere in there. I found I had my credit ran because I was getting ready to refinance or something. And there was a mortgage for $1,007. Not the payment. I'm talking the full mortgage that shows on my credit was $1,007 total principal balance.
Short payoff or something?
Dude, I don't know what the hell it was, and I didn't even know who the company was, but it said in foreclosure. I'm like, okay, $1,007 was in. What are you talking? And so it took like 2.5 years of fighting and yelling and arguing and writing. I don't know whose it was. I have no clue. But if I would have been paying attention, I mean, honestly, if I'd have been going and checking my report on either a biannual or annual basis, I would have known that was there, and I could have probably addressed it a little bit sooner. Because and the only reason I found it is I applied for something. It was, I remember what it was. I think I wanted to reduce my interest rate on my car loan, and I got declined. I'm like, wait, what? Why? And that's what it was. It said you had a foreclosure.
The one I use is CreditWise. It's Capital One, and it monitors my credit. I don't think it gives me a completely accurate credit score. It's pretty accurate. It's within
the
20 or 30. It's within 20 or 30 points probably, but it does alert me if there's changes, or if someone pulled my credit, or or if there's a soft pull, I get notified. They said or if there's a change in my credit score, they'll notify me.
They'll notify you.
Yeah, so it's nice. It's a nice tool because obviously if something's happening, I'm going to know.
Exactly. And that's the most important thing is if something's happening, I want to know. There's alternatives that you can always.
Everybody needs to use some kind of monitoring.
Yeah. I mean, don't get me wrong, you can freeze your credit to where nothing can happen without, you giving it a call and
contacting the bureaus directly.
Yeah. Yeah, exactly. Just so everyone can see, I'm sure everyone can see this right now. I went ahead and added the page on there for annualcreditreport.com. So you guys could all see that page in case you wanted to go out there and check that out. I'm going to go ahead and remove that. But yeah, that's the place I would go. And just, it's so damn important. You better monitor it. I mean, what do you, one thing I picked up from you years and years and years ago was inspect what you expect. And
I didn't make it up. I gathered that from somewhere along the line myself.
Well, I'm giving you the credit. You can pass the credit down, and trust me, my son hates that because I say it all the time.
Oh, no,
I mean, he's like, Dad, of course I did it. I'm like, yeah, well,
my kids have heard it before.
Oh, I'm sure. I inspect what I expect, and so same thing here. You expect to have good credit? Well, inspect it. Make sure you do. Check it out, and make sure you have good credit. All right. Well, let's get into a few little tips. Unless you look like you had something.
Well, I
else.
just was going to say, if you're doing a mortgage, with us, and we see that there's a situation within your credit that can be resolved because you have some proof or some thing, we can do that instantly. It's what we call rapid rescore because we work directly with the bureaus. If you have evidence that something was fraudulent on your credit, like in your case, then we can go right to the bureau and have it removed.
For you. And we can, and guys, we do that all the time.
Or when we say rapid rescore, we mean a couple of days.
Yeah, 2-3 days.
Yeah.
Or if your balance is less, if we pull the credit, I mean, this happens all the time. This happens to me a lot too, because, one of the tips that I learned over the years is all the reoccurring bills I have, like, the water bill, the gas bill. I mean, all those bills that you're going to have every month, the better wash bill to get your car washed. I mean, all that stuff that you're going to have every month, don't put that on your bank card, or at least I don't. And this is a tip I would try to tell everybody because it's helped me a lot. I don't put that stuff on my bank card. It doesn't go to my bank account. I don't have any auto payments on my bank account. I put everything on one single credit card that handles all my household bills. It handles, we pay my groceries on it, gas, whatever it is. And at the end of every month or every 2 weeks, I go in and pay it off. But that means a lot of times when that card reports, it may have a $7,000 balance or a $2,000 balance. Whereas, so then it can help push your score down a little bit because you're utilizing a lot of your credit. So the reason I say that is because
your credit limit raised, Jeff.
Well, no, it is. No, it is. It doesn't affect it really bad, but it is. I mean, it's a sizable card. I mean, I never use very much of it. It's just every month. And don't get me wrong, every month I think, okay, there's no big expenses.
Oh no,
dude, I got kids. True. There's no such thing as no big expenses. I mean, every single month there's a big expense, no matter what it is.
We used to say everything costs $1,000. Well, everything costs $3,000 now.
Everything's $3,000.
Inflation.
Yeah, inflation. It sucks. But what I would suggest is if you can put those things on a card like that's the way to do it, and have your monthly work in that way, and then you can just pay it one time. Mm-hmm. It's made balancing my checkbook way easier.
Sure,
because I don't have 7 million different transactions going through my bank every month.
No, the phone automation has helped credit a lot as well.
Oh, true.
The fact that you can pay your bills from your phone.
Yeah, they're taking all the excuses out.
Yeah,
I mailed that check.
Right.
Oh.
No.
Yeah, that's all gone.
When I first got in the bureau, it's true. You could lose. I mean, if you moved, you didn't get your bill.
Oh, absolutely.
You forget about it. I mean, that stuff is real. But now it's not real.
No, they key to management, remove excuses, right? Excuse elimination. Well, there you go. They've eliminated excuses because I can guarantee you I mailed that check. I don't know why you haven't got it yet.
Right. Well,
I mean, I've used it.
I want to see there's probably some people that still mail their bills in. My dad, maybe.
Yeah, my mom probably. I'm guessing my dad too. I mean, but but like you were saying, we can do rapid rescores. So if you've got a lower balance and things like that, and we know it could push your score up, and we can get a pretty good idea. I don't know how many credit bureaus you think you've reviewed. I don't want to
26 years worth, whatever that is.
Yeah, it's a ton.
Thousands.
Yeah, thousands upon thousands. All right, well, let's talk a few tips that we can do, and we'll kind of start out with the younger guys and the younger people that are just starting out, because first time home buyers is a big thing. I mean, we just saw a deal where the average age of the first time home buyer now is moving up.
31.
That's
29 and 89.
Yeah,
I think that's what
I think it's 36 now. The average age of home buyer or first time home buyer. That kind of stinks. I mean, I like the thought of a 22-year-old or a 20-year-old or an 18-year-old buying a house. I mean, I remember when we did your son's loan.
I mean, it's so hard for a young person to buy a house with the prices the way they are. Now the interest rates are a little higher. I mean, the house values are still up there. I mean, it's a little more difficult.
It is, but it's damn near impossible if you don't have decent credit or if you haven't started building your credit.
It's just it's so valuable to buy a home. Once you own that home, you start building wealth.
Yeah, it's still the number one way to build wealth.
It's the best investment you'll probably make your entire life.
I mean, I guess you could put money in cryptocurrency and you'll make some money there. Yeah, exactly. That's I've had that phase for about 5 years now. I have. Yeah, me too.
A little quiver in my voice.
I don't even know if I like talking about it anymore. But let's talk about some things you can do for, if you got kids that are 15, 16, 17. I mean, look, let's be real. As much as we hate it, they're going to be gone before long. They're going to move out and they're going to go on their own, or you hope so. I mean, God forbid, I don't really need him living in my house until he's 50. But I mean, as much as I kind of want him to, but
That'd be weird.
No, it would be weird, but they're going to be gone and they're going to be moving on. So, one thing I did is I added my son to my Capital One card. He's only 14, but the Capital One will allow at 14 years old to add him. So I did. Now, granted, there's a little more pressure on me. I damn sure better not accidentally miss a payment because then it goes on him negative.
Yeah.
But
Doesn't work.
Yeah. Oh God, that would be awful. But those are the kind of things that you can do to help your kids build credit. One thing that a good friend of mine, and he may be listening right now, but he's a good buddy of mine here local. He, we've talked about when your kid goes to college, instead of living in the dorms or, renting an apartment for $2,500 a month or whatever it is, or a Roach motel for $800 a month, buy a house with 4 bedrooms,
especially in a college town. I mean, it's like you're always going to be able to rent it.
Absolutely.
I mean, that could be generational.
Yeah.
And have that 20, 30 years.
I was going to say, you keep it right. Maybe the college buys it out from you later on for a fraternity or something. But, you can keep that for a long time. And number one, your kid will learn a little responsibility because if he tears it up, it's his. I mean, now I still get my cut back. I want my money back, but it's his. So hopefully learn a little responsibility and learn how to manage money and learn how to manage credit, learn how to manage all these things and build some equity. I mean, if you could come out of college and all I hear about is student loan debt, got college. Well, yeah, no shit. College costs a lot of money. I get it. I know it does. But if you could go in there and you could walk out with whatever debt you walked out with, but with a nest egg because you've built some money, you built some equity in a property, offset it a little bit and you're going to learn something throughout the process. So
plus the credit boost.
Plus the boost to your credit. And how much easier is it to buy your next house or your first real house for just you after you've already owned one, you show in cash, because you're still going to own that. Let's say you don't sell it, you're going to own it. So you're cash flowing off of it. Mm-hmm. So you've got positive income. Right. You're a landlord at 19.
It's not even really considered a debt. I mean, it's a debt, but it's a positive asset.
Exactly.
Yeah. So it's actually impacting your debt ratio in a positive way.
Yeah. And it's not like you got to go out and spend $500,000 on a house. Some of these smaller college towns out there, you might find something for $120,000 that's 3-bedroom, 2-bath, or 1.5. I mean,
it needs to be an outline. Yeah.
Yeah. Smaller areas. Right. I mean, you're not going to do that.
I mean, what is property value in Trenton right now, Jeff? You probably know.
I have no clue. I have no idea.
They still have a college there, don't they?
Yeah, JUCO, NCMC. Yeah, it's a little small school. They got dorms and everything like that there. But
I spent some time in Trenton. You spent a lot of time.
I spent a lot of time in Trenton. I was just in Trenton a couple weeks ago. So anyway, back to this. So that's one tip, especially how you can help your younger borrower. A tip that I like, and I think we already kind of brushed on it, but utilizing your credit cards and using them, putting them to work for you. That's the biggest thing, is put
responsible utilization.
Well, yeah, everything. I mean,
make sure you have plenty of room on your credit, on the amount of credit that you have available.
Yes. But the way to get there is to use it, pay it off, use it, pay it off, use it, pay it off, use it. And then they'll increase your limit. The longer that you've had it, the more my credit card gets used all the time, but it gets paid off all the time. And so I haven't asked for them to raise my limit in a while, but I'm sure that they would. I don't know why they wouldn't. In fact, I might try that after today.
Yeah, I mean, credit cards are fun. I mean, it's like free money, but eventually you're gonna have to pay that bill. So just remember, you just need to treat it as if it's cash. You're just utilizing it as a tool.
As a tool, yes. You can put your finances to work for you instead of against you, because unfortunately, a lot of people, it works against them. And it's easy to fall into that trap. You miss one payment, well, your score drops, and then you miss another one. You've just got to make sure that you live within your means. You do things within your means. It doesn't mean get a credit card, put all your bills on there, and then go out and go crazy. That's not what it means. It means be responsible with what you're doing. Again, length of credit history is always important. Keep those cards open.
Consistency over time.
But use them. You can't. Those credit cards that I've had forever that are just sitting there that I haven't used in a long time, they may not be doing a dang thing for me. I may just be paying a $49 annual fee every year, and that's it.
Yeah, here's something we need to talk about, because I ran into this recently. So I was talking to a veteran who was retired, and he paid everything cash. So he was doing everything with cash, and I knew pretty much right when I started talking to him, because I've been doing this a long time, that he may not even have a score.
Mm-hmm.
And so of course when we pulled his credit, he was what we call a ghost in the machine, a ghost, because there was no score. And he didn't understand. He goes, well, I should have good credit. I always pay cash. Well, that was the problem, is he didn't have any impressions in the credit reporting bureaus. So, I mean, you got to have active credit in order to have credit. Just because you're paid everything off and it's been a couple of years since you used your credit doesn't mean you have good credit. Probably means you have zero credit.
No, sometimes that's one of the scariest things you hear is, wow, I don't have any credit, or
yeah, I paid
don't have
everything
any debt.
off 2 years ago, and I just pay cash now.
Yeah,
Oh,
and
gosh. Okay.
well, don't get me
We're
wrong,
gonna have to get you a credit card, sir.
yeah, we're gonna have to do something because and that's where the adding as an authorized user, like I was talking about for the younger kids. Even adults, I mean, add as an authorized user. I think, hell, at one time I got added as an authorized user on one of your cards to juice off your credit.
Yep. No, so you were coming back, and I'd just been through it. So
yeah, I mean,
it worked good.
Hell yes, it worked good. Like a charm. Just like, guess what? It works just like we're saying it works.
Yeah.
And that's how we know things work, guys, is we've done it. We've been there. We've lived it.
That's a good friend, by the way.
Yeah, well, hey, like I said, we're brothers, man.
Right, no, we are.
Yeah, and trust me, if you've been around us together, we're brothers, because we fight like cats and dogs. It's
Never.
No. Well, hell, yesterday before we did something, we had to argue for 15 minutes. I mean, it was we'll probably argue after this for 15 minutes. But
finally, you just said, "Are we just arguing to argue?"
And
we hadn't done it in a while.
Yeah, we hadn't done it in a while, and sometimes that's the way it works. But we've lived through this. We've done it all. We've experienced it all. It's part of life. And like you said, used to, you get kind of embarrassed because, God,
I was really embarrassed. I mean, I'm in banking.
Yeah. Well, not only that, but
it's embarrassing. My dad was a bank examiner. He never did anything wrong credit wise.
Yeah.
But you get into this variable income, self-employed roller coaster ride of a business, the mortgage business, and you don't understand because you're not taught it in school. And it just happened to me. And it was, I got over my skis, and it was embarrassing, but I recovered. And because I recovered, I learned so much valuable information, and I gained a wisdom that you don't get just normally.
No, for sure.
I imparted that, of course, to my children and everybody that had listened, and I feel like because I went through that, I have empathy for people that are going through that.
Oh, for sure.
And I have a perspective that a lot of other maybe people in my industry don't have. Although if they've been in as long as I have and they were self-employed, there's a dice roll that they might have had some financial issues.
Well,
because this is quite a roller coaster.
I mean, name a guy. I don't care.
Especially before you have your net worth built up and you're just,
Well, when you're trying to figure things out. I mean, let's be honest. When we came into this business, I mean, I can remember the guy that brought me in the business in 2002. He goes, "All right, that's your computer, that's your desk, that's your phone. Good luck." I'm like,
"Right,
wait. So is there training? I just trained
compliant."
You. Yeah, exactly. Now that things have changed in the last 21 years, but that was how a guy brought me in, and and I can remember spending 3 months broke,
right?
Like, like cowering in the corner of your bedroom, freaking out, like, where the hell? How am I going to pay rent?
But then they give you like 15 grand in a check.
Yeah, because
no taxes taken out, no FICO, nothing, no Social Security, and then you just spend it because you haven't got any money in a while, and so you.
Well, yeah,
and you didn't pay any taxes.
Oh, God, I don't want to get.
It's fun to relive it, isn't it?
No, it's not. That was freaking miserable, man. I mean, just the thought of all that, but again, I think we wouldn't be doing ourselves or anyone else a service if we don't relive some of that and use some of that experience.
The pain. It was a great lesson.
Dude, it was a great lesson.
Yeah,
but it was painful as hell. I'm hoping I hope my son or my kids, both my kids, learn something from my mistakes, but I hope they also make their own, because you can only learn so much through somebody else.
Yeah.
Sometimes you got to go out there and scrape your knee yourself.
There's new kinds of mistakes out there. There's modern mistakes that
I don't even want to think. I don't even want to think about the modern mistakes, because those involve proof of everything. Because there's video and all that. So
texting the wrong thing.
They're doing anything the wrong way.
Ask Bezos.
Oh God! Oh, ask any of those guys. Well, and that's another thing. All those guys, the Elon Musk, the Bill Gates, trust me, they've gone through credit woes in their lifetime too. Now it's probably before they had 200 billion rolling, but Jeff Bezos didn't always have 200 billion, and neither did Elon Musk and Bill Gates. They all had issues back in the day. So you're not alone, and we all have been there. So, but if you have any other questions, give us a call. We're happy to answer anything we can. It's 855-971-1050. You can call the Home Buying Insider Show. You can either talk to Jeff or Josh. We're always available to answer any questions. Happy to do it. You can also check us out online at homebuyinginsiders.com.
It's Friday.
It is Friday. Yes, absolutely. It's Friday, and I'm ready.
I'm wearing red. I'm just still a little giddy over that Super Bowl.
Yeah, there's a good question. What the hell's everyone doing on Sundays now? I mean, I know what you're doing this Sunday. Yeah, I know what you're doing this Sunday, but I mean, Sundays, the first few Sundays after the Super Bowl are kind of.
Well, your ears are still ringing a little bit. You're just kind of like in a
daze. And it's not the best weather.
If you won the Super Bowl. If you didn't win the Super Bowl, then you're just like, ugh.
Yeah, so the rest of you clowns out
there. But if
you
won the Super Bowl, you get a couple of weeks of just basking in the fact that you won a Super Bowl and everybody else didn't.
Exactly. Which when I say a couple of weeks, you get 50 because until the next Super Bowl time comes around.
Oh, and we're hosting the draft. I mean,
it doesn't.
Now, if anybody thinks the NFL's fixed, that's a good reason to think maybe that's true, right?
Well, if it is, it's about damn time it was fixed for the Kansas City Chiefs. Well, I'm ready.
They did a good job. I mean, because it looked real.
No, for sure. It looked good. So, well, guys, we thank you for joining us. This is our first live. Good job.
Yeah. We did this live?
Yeah, this was done
You didn't even tell me.
No.
I'm kidding.